Good morning and welcome to The Mint. I'm Andy Hodges. Today on The Mint, we examine how Zimbabwe's power deficit has affected a critical part of the economy, and that's mobile networks, and in particular, mobile money. Don't go away. All this and more on The Mint coming up right now. Now then, of course, we want to hear from you, your comments. We're live from ZTN headquarters in Harare, Zimbabwe. Please keep your comments coming in on our Facebook page, Zimpapers TV network, and of course our website, ztn.co.zw. Now, as usual in the market, we look at the Zimbabwe Stock Exchange. Now then, big news coming out of South Africa. Now, last Friday came the news that the world's third biggest food and drink company is making one of its largest investments outside of the United States in South Africa. PepsiCo wants to buy Pioneer Foods, which owns major brands like Sasco, Speco, Liquifruit, Ceres, and Bokomo. Apart from Pepsi, the US giant also owns Mountain Dew, Lay's, Gatorade, Tropicana, 7-Up, Doritos, Quaker Foods, and Fritos. The deal is of much greater significance than the 24 billion rand PepsiCo will be buying Pioneer Foods for. It's hugely promising that a massive American company would do one of the biggest deals outside of South Africa outside of the US in South Africa. It must mean that it's taking a positive view on the long-term prospects of the country. That's what analysts predict. Now, 2 years ago, there were rumors that a large multinational company, probably PepsiCo, was considering buying Pioneer, but it was apparently scared off by a succession of credit rating downgrades and political turmoil of the Zuma era. Now it's back. And in this time, however, Pioneer appears to be a much bigger bargain. In 2017, Pioneer was worth 45 billion rand. It shrank to 15 billion rand this year amid a perfect storm that wreaked havoc on its profitability, rocketing maize prices, tough competition in the bread market, and embattled consumers. All of these hurt Pioneer's bottom line. Some companies in South Africa, however, appear to be astonishingly cheap. In fact, more South African companies will become the target of takeovers, particularly in the food sector, where companies are cheap after a nightmare period of drought, a rocketing rand, sky-high fuel prices, and depressed household spending. PepsiCo will use its considerable global know-how to boost Pioneer Food Groceries brands to a new level, which will mean trouble for other players like Tiger Brands, owner of competitor brands like Albany, Ace, and Tastic. Now add to that an increasingly aggressive Libster, which owns Lancewood, Denny, and produces foods under the Woolworths and Pick and Pay brands, and competition on consumer products is expected to heat up. This is really good for consumers because it should mean lower prices and better quality products. Now then, let's have a quick look at US markets. Now then, US stock index futures rose on Monday ahead of a big week for earnings. The gains came after even as expectations of aggressive policy easings from the Federal Reserve Bank dampen. More than a quarter of the S&P 500 reports earnings this week, including so-called FANG stocks, that's namely Facebook, Alphabet, and Amazon, along with blue chips like McDonald's and Boeing. For second quarter earnings reported so far, 79% of the S&P 500 companies have topped earnings results, according to FactSec. So far, more than 15% of the S&P 500 have posted quarterly results. Of those companies, as I said, 78.5 have topped analyst expectations for earnings, while 67% have reported better than expected quarterly revenues. Stocks struggled last week, posting their biggest weekly decline since May, as investors digested the first batch of corporate earnings reports and signals of a potential Fed policy moves. Remember, the Federal Reserve Bank meets on Thursday to decide whether they will cut interest rates. The market is anticipating a 25 basis point interest rate. However, a small portion of the market expects the Fed may reduce interest rates by as much as 50 basis points. Now then, European markets. European stocks were mixed yesterday amid warnings, expectations of an aggressive interest rate cut by the Federal Reserve Bank. Europe's oil and gas stocks were among the best performers amid heightened tensions in the Middle East. Now, I really want to look at what's happening in the UK, because as you know, yesterday was the final day for the nomination or acceptance of the new Conservative leader who will become the next Prime Minister of the United Kingdom. However, the problem is that any new leader will have 5 specific problems that they're going to have to deal with the first day they get into office. The first problem, of course, is renegotiating Brexit. Now, one of the most pressing issues that the British next Prime Minister has is what brought down Theresa May, and that, of course, is Brexit. Both candidates who were in the leadership race had pledged to renegotiate the Brexit deal, and Theresa May agreed with the EU. Apologies. Johnson has said he is confident of securing a new agreement. However, doing so will be incredibly difficult. The prospect of a new no-deal Brexit is growing significantly, with Johnson insisting that he will take Britain out of the EU on October the 31st, do or die, and I quote. The former Foreign Secretary, who may probably now be the new leader of the United Kingdom, said that Britain must prepare to leave the EU without a deal, both as a practical necessity but also as a negotiating tactic. However, preparing for a no-deal Brexit will be very difficult, both logistically and politically. Another thing, now, could the new leader ultimately opt to suspend Parliament in order to force through Brexit? However, doing that will be politically explosive. And so far, both candidates, including Johnson, have insisted they will be very reluctant to do so. Now then, the British Parliament, of course, has repeatedly voted against either leaving the EU with a deal or leaving the EU without a deal. So, of course, any new leader, they promise to deliver Brexit no matter what, may ultimately have little choice but to go back to the country and go for a new general election. Conservative MPs, however, really just do not want to do that. The party is currently experiencing historic lows in the opinion polls and came in a disastrous 4th place in the recent European Parliament elections. Now then, what about opening Britain's purse strings? When May first became Prime Minister, she pledged to tackle burning injustices in the country, such as income inequality, the lack of affordable housing, and the crisis in social care, principally the National Health Service. However, instead of dealing with those issues, her premiership has been entirely dominated by Brexit, with little significant domestic legacy to speak of. Both the candidates in the leadership campaign, particularly Boris Johnson, are determined not to make the same mistake and have announced a range of bold and expensive domestic policies. Johnson has promised to cut tax for high earners, do away with tax on sugar-sweetened drinks, and put 20,000 additional police officers on the streets by 2020. Now then, another problem, of course, that any new Prime Minister has to come in with is, how do you deal with President Donald Trump? Now, both candidates have a significant experience as Foreign Secretary dealing with President Trump and appear to have a decent personal relationship with him. But Johnson says that securing a trade deal with the US is a key part of their post-Brexit plan. So those are really the 5 critical issues that on day one, any new British Prime Minister will have to deal with the moment they step into 10 Downing Street. Now then, Asian markets. Now, stocks in Asia were lower on Monday as shares on a new Nasdaq-style technology board on the Shanghai Stock Exchange skyrocketed on their debut day. In mainland China, the Shanghai Composite slipped 1.27% on the day to 2886.97. This is where it's trading now, slightly up 0.95%. and the Shanghai Composite also slipped 1.785%. Now then, the new market, it's called STAR. Now the STAR market started trading in Shanghai yesterday as shares of the first batch of 25 companies surged following a massive oversubscription prior to their public debut. And in Hong Kong, the Hang Seng slipped 1.2% as its final hour of trading, and the Nikkei 225 in Japan declined 0.23% to close at 21,416.79. Looking at individual stocks, shares of Asahi Group Holdings plunged 8.87% after the company announced it will issue up to 200 billion yen, it's about $1.85 billion, of shares to fund its planned purchase of Anheuser-Busch InBev's Australian operations. Anheuser-Busch InBev, of course, is the maker and owner of Budweiser's beer. And in Japan, Japan's ruling party coalition won a majority in the country's upper house of parliament in elections on Sunday. This came as Japan remains embroiled in a trade dispute with South Korea. Let's have a quick look at African currencies. Now then, let's look at what's happening with the US dollar. And I really want to focus on the euro. Foreign exchange markets paused on Monday as investors wait to see by how much and how fast policymakers might ease policy, beginning with the European Central Bank on Thursday. The euro edged down towards 1.12 against the dollar as the dollar gained the upper hand, thanks mostly to safe haven demand amid rising tensions in the Middle East. The Swiss franc hit a new two-year high against the euro, touching 1.1010 francs per euro. The Swiss currency has benefited from investors looking for a refuge from worries about the eurozone economy. Data published last week indicated that investors remain net long of dollars, unchanged from the previous week, with the US currency having weathered rising expectations for interest rates cuts from the Federal Reserve Bank relatively well. Currency markets have been stuck in a narrow trading band in recent weeks, with expectations for easing by both the Federal Reserve Bank and the European Central Bank more or less cancelling out the impact on the euro and dollar. Now then, look at what's happening with commodities around the world. Now, gold prices. Gold prices gained on Monday following a steep fall in the previous session as tensions in the Middle East and weaker financial markets supported the metal, while a stronger dollar kept a lid on gains. Spot gold was up 0.2% at 1427.31 per ounce, and the metal hit 1452.60 in the previous session, its highest since May 2013. So gold traders, there's some support and strength at the moment in gold, really on the back of financial instability and the fear of markets of economic stagnation across the world. Iran's Revolutionary Guard said they had captured a British-flagged oil tanker in the Gulf after Britain seized an Iranian vessel earlier this month, ratcheting up tensions along a vital international oil shipping route. Now then, oil prices rose more than 2% on Monday on concerns that Iran's seizure of a British tanker last week may lead to supply disruption in the energy-rich Gulf. Iran's Revolutionary Guard said on Friday they had captured a British-flagged oil tanker in the Gulf in response to Britain's seizure of an Iranian tanker earlier in the month. The move has increased the fear of potential supply disruptions in the Strait of Hormuz at the mouth of the Gulf, through which flows about 1/5 of the world's oil supplies. Britain was weighing its next move on Monday, with few good options apparent as a recording emerged showing the Iranian military defied a British warship when it boarded and seized the ship. Well, that's it for what's in the market. Now, coming up after the breather in the Mint and the Mint Special is Zimbabwe's power deficit, it's now affecting something that you would not expect. However, it is now a reality, and that's mobile networks. Not just making a phone call, but what about mobile money platforms? We're going to unpack this for you on The Mint. Don't go away. We'll be right back. To The Mint. Of course, please, your comments, keep them coming in on our Facebook page, Zim Papers TV Network, and of course our website, ztn.co.zw. I urge you, go have a look at our website, because there you'll find content from our ZTN newsroom, as well as programs. We have our sports show on the couch, and we also have our health show, Heartbeat, which is going to be live, I believe, on Thursday at 1 o'clock. So don't miss that. There's some real issues there that we need to look at in terms of health. Now then, our main story. Mobile services suffer from load shedding. Now then, most Zimbabweans get home every day to find their homes in darkness as the 15-hour load shedding program remains in full swing. With a huge power deficit supply Zimbabwe faces, lack of prior long-term planning, a huge debt owed to other power producers, a low water conditions at Kariba, old and dilapidated machinery, and of course, the $1.2 billion debt owed to ZESA by consumers. There appears to be no respite from the current power cuts the nation is facing, in the short term at least. Now, hard-suffering Zimbabweans now have to face another challenge. Power cuts have invaded mobile network operators, and I must be honest, it's not looking very pretty. The Mint reporter Ndaka Majaka went out on the streets and spoke to Zimbabweans who shared their experiences from the EcoNet system failure.
Plus, I don't think a grocery to teach him so that I don't answer. And Dogas only Tingra Murichka to an orgy. And Randa figures made.
System failure EcoNet yakati affecta chikuru because indakabva kumba makuseni kuti ndichienda kuchikoro saka mari yangu ingari mueco cash pazvinhu zvakadai vanofanira kutisendera notice kuti ticha upgrade masystems edu saka pachave nesystem failure kubva panguva yakadai kusvika panguva yakadai zvaita nani because tenge chiziva unogara wakagadzirira
isusu toita basa remaoko ka zvakati affecta cause hapana kana client yakauya kuti munhu uite chinhu angasingakupe mari vamwe vakatofamba kumba taida totengawo magroceries but takatotadza cause mari inenge irichi meeco cash ndo zvakati affecta zvakanyanya kuwanda.
Now, Ndaka Majaka also spoke to an informal lady who's trading in the informal sector because, of course, one of the things that went down was mobile payments, specifically EcoCash. And, of course, businesses, particularly in the informal sector, lost out on a huge revenue because of it. Listen to what the lady had to say. Now, of course, she failed. She obviously failed because when people went in to buy product, they couldn't, of course, pay with their EcoCash. So customers were turned away, and not just in informal shops, but also in large supermarkets. And and it's a tragic story as well. We met a young person, a student, who actually failed to return to find their way home due to the malfunction and the downtime of the networks. Listen to what this poor student said. Sorry about that. We'll give you that up sound later. Now then, we're joined by Kudzanai Sharara, business reporter here at the Business Weekly. I always urge you, please go buy the Business Weekly. It comes out on Fridays, right?
Friday, yeah.
Every Friday. You'll get some great stories and in-depth there. Kudzanai, Zimbabweans are suffering already. 15 hours of power cuts a day, and then they get home and the network is down. And more importantly, they can't even transact at shops using the mobile platform EcoCash.
Yes, Eddie, you're right, and it has got a negative, huge and significant impact on the economy. at a time when we want all hands on the deck, and then you have something like that, it means that you won't be able to transact, you won't be able to make any payments for raw materials, for anything that you would want. And this is something that we should not expect to be happening at the moment.
I mean, it's a problem. It's a double whammy. You've got on the one side power cuts, which is affecting production. Companies literally not being able to operate because there's no power. Right. On the other side, we've got consumers who are braving the power cuts, and they get home and basically can't use WhatsApp, they can't use mobile money, they can't move, they can't even make phone calls. This is just not good.
Look, and it goes beyond the phone calls. And with phone calls, you can say, well, we've been in the past, we didn't even have
yeah, we used to use the dial phones.
But when it comes to mobile money now, this is where it gets big. And I think as government, we should isolate especially the network operating center, which was affected. We should isolate it from load shedding. This is no longer about a private company. This is now a national payment system. That 88% of transactions that are taking place in this country are going through that platform, and you cannot accept having it down.
Right. I mean, because now you're right. I mean, in fact, the numbers we've got here say that Echo Cash holds about 90% of market share of all mobile money transactions. Now, you know, it's a funny thing, this, the chicken egg, because we've heard different analysts in the marketplace saying that obviously Econet have a monopoly, okay? They have 90% of mobile money payments. However, you can't really fault a company for coming up with a good product, getting it to market, giving what the consumers want, and then becoming popular. You can't then turn around and say, by the way, you're a monopoly and you shouldn't have done that.
Yes, and you're right. You can't say they're a monopoly because there are players that were in that particular space before them. We had the Net One was there, Teleso was there, and then Econet come in, and they managed to invest, because it's about investment. And I can tell you, if you look at the Portras report, telco companies, including all of them, the three of them, they in terms of investment in equipment, it went down by 22%, which means that they are failing to invest. And then you look at the tariff that they are currently charging, it's not enough to cover for the huge cost they are now incurring in terms of even powering your base stations.
Right, now we're going to get to that, because look, Zimbabwe mobile operators seem to have introduced a downtime of at least 8 hours per day on their base stations, as operating them without power and support costs have drained the business. Now let's give you a bit of some statistics here. Zimbabwe had a total of 8,796 active base stations as of 31 December 2018. And as of March this year, the total number of base stations in the country rose to 8,884. Now of these, Econet holds 52.7% 2G base stations, 56.6% of 3G, and 69.9% of LTE. They're by far the largest base station network. Net One owns 34% of 2G base stations, 28.5% of 3G and LTE infrastructure. And Telecel, the smallest, has 13.3% of 2G, 14.9% of 3G, and 1.6% of LTE coverage. So Econet is still the largest telco company in the country. Now, here's the irony of this, because by law, the National Telecoms Regulator insists that networks have to be up 90% of the time. It's a law. And if they do not hit that number, they are actually fined. And last year, some networks were fined quite large amounts for that. Now, it's an irony, isn't it? I mean, on the one side, you've got power cuts. On the other side, if you don't have an up service, you get fined by the regulator.
Right, and at the moment, I'm sure the downtime is even lower, higher than that. I think they are around 87% when they are up, and they have to resort to. I know one of the major network operators. Only 71% of their base stations have got an option for a generator, and the other 21%
work on power.
Yes, work on power.
Right.
So
even the problem is that some of the base stations don't even have capacity for generators, even if the mobile operators wanted to.
Yes, and with the current tariffs, they haven't been able to even to buy in batteries, to repair their batteries. I think their batteries take about 3 to 4 years, but they haven't been able to replace them, which means that they are now old, and when there is downtime of ZESA, it means that those batteries will not last long because they are overused.
Wait, you keep saying tariffs, but I thought that recently, in fact yesterday, if I'm not mistaken, if not Sunday, most mobile operators increased their tariffs substantially. In fact, EcoNet was one of them. And you're saying that even with that increase in tariffs, you still think that the tariffs are low?
Yes, the tariffs that they've put up now, they are the ones that they were allowed to do when the exchange rate was 1:3. Now the rate is 1:9. And so they're just removing all those promotions that they were taking.
Right. Wait, hang on, Kudzanai. Are you saying that we can expect a tariff increase again in the near future?
Definitely.
Oh, my goodness. Well, there you go. It looks like Kudzanai believes that the tariffs are a bit low. And, in fact, based on the 1:3 exchange rate, and now at 1:8, 1:8.5, we may see even more pressure on tariffs to go up. Look, let me give you some costs, and you'll understand exactly where the problem lies. Now, maintaining 8,008 base stations for 16 hours on diesel alone at an average of 20 litres per day means the telecommunications sector is spending a minimum of $100,000 per day. Over a month, the bill balloons to over $3 million. Now, that figure, I would tell you, has gone up because, of course, fuel prices went up to about $7 just like 2 days ago. So, therefore, that number of $3 million is actually gone up. Now, add on top of that the cost of maintenance, maintaining the base stations, technical maintenance, capital investment spent in installing them, which all operators are still paying loans in US dollars, interconnection fees and the monthly salaries and wages bill. And every base station in Zimbabwe, of course, needs a security guard, security walling, and those with solar and diesel generators demand physical human presence to guard against theft. And this comes at a cost. When you put all these costs together, you understand that the numbers are unsustainable. And in fact, the mobile networks cannot actually afford to keep these base stations running without, of course, charging you and me. In other words, increasing tariffs and passing it on to the consumers. Now then, we cross over to our Mint reporter Indaka Majaka. Indaka, this is a huge problem because, I mean, talk us through this. I mean, these costs are astronomical, and there's no way networks can actually afford them. Okay, hello, Indaka? Oh, okay, we seem to have a technical problem. Let me throw it to you, Kudzanai. Look, $3 million a month is no joke, okay? And obviously that number is going up, and I believe the fuel price will be going up soon anyway. There's no way, if the interbank rate is at 8.5 to 1, the fuel price can stay at 7. It's got to go at least to 8.5 to 1. Therefore, the costs are going to go up. And of course, mobile networks, there's only one place they can pass those costs on to, me and you.
Yes, and you saw their statement yesterday, one of the network operators, EcoNet, when they said that they're going to take drastic measures. The drastic measure part is when they just look at a base station and said, okay, this is the cost of putting up, of running this base station using diesel and everything else. And this is what I'm getting from that base station.
From the other side.
You switch it off.
You switch it off. And in fact, I'm told that they're looking at more. In fact, we've got Indaka on the line. Indaka, this is serious, you know. I mean, mobile networks cannot sustain such a high cost because that cost is just going to be passed on to consumers.
What you're saying is absolutely correct. Mobile operators cannot sustain the cost. As you know, just yesterday, the price of diesel went up by 23%. So that means that's an additional 23% to their cost structure, which is something that they cannot sustain. We've heard ZESA saying that they're going to be charging exporters so that exporters can pay for power in foreign exchange. But as you know, mobile network operators do not primarily export anything. As you may be aware, SI4 of 2004 empowers the power utility to charge in foreign exchange, but legal experts tell me that ZESA does not have legal grounds to charge for mobile network operators to pay for power in foreign exchange.
You're the one who went to speak to some ordinary Zimbabweans on the street that happened. What were the major sentiments that they gave you?
Well, the major sentiment is that they feel that as much as EcoNet controls about 95% of the $1.4 billion that goes through mobile money transfer agencies per quarter, they feel that EcoNet maybe is becoming a bit too powerful. So they're asking that if it's possible, the mobile network operators need to come together and just merge the services under a mobile interoperability arrangement. This way, it will allow people to transact from one money to telecash, then back to EcoCash without much of an inconvenience, because apparently the other services were up on Saturday as much as EcoCash was not working.
All right, that's Indaka Majaka, Mint reporter. The point she makes there is interconnectivity. Even though EcoCash was down, apparently some of the other money services were operating. But you can't transact between EcoCash and One Money or Telecel Cash. Well, you can't do that, and that's a huge problem.
Yes, and I think that's what we need to do in terms of interconnectivity amongst the network providers. But still, we have got a bigger network provider, and when it costs, it means that if they are struggling as big as they are, what is happening to the other providers? I
think I must stress, it is true that Econet does have a dominant share in the mobile money system. However, how can you fault a company, as I said earlier, for coming up with great products that the customers want? And in fact, they beat the competition because the competition was there when they introduced EcoCash. It's not their fault that people like EcoCash more than other products, and it's really up to the other mobile operators to pull up their socks and get in the game.
That's true, Andy, and they need to invest. If you don't invest, then you don't expect to reap where you did not sow. That's what the saying goes.
Now, Kutz and I did mention that Econet did issue a press statement on Saturday, and I just want to read you a little bit of it because this is important. It said, Econet would like to point out that the company cannot sustain the current operating conditions of running backup generators for 14 to 18 hours daily based on the current heavily eroded tariffs. And it says that we are also now incurring higher costs because of the heavy reliance on generators, as we now have to service the generators every fortnight as opposed to the scheduled quarterly service interviews. So Econet, of course, is desperately trying to come up with a solution for consumers, as I'm sure are all the other mobile network operators. However, it's all down to dollars and cents. Can they afford to keep generators running for 14 to 18 hours at prices of $7 a litre for diesel, for example? It's just not economic sustainable without something giving. And that something giving is tariffs rises.
So since the beginning of the year, and let's put it into perspective, the price of fuel went up 7 times. Right. But the tariffs haven't gone up.
Haven't gone up that much.
How do you balance?
Well, look at this. I mean, Econet has the most subscribers, 8.3 million subscribers at the end of Q3 2018. And unfortunately, they couldn't. I mean, in fact, the online magazine TechMag said the following service were down: data internet, USSD services. The Stuart Bank app was also down. EcoCash data app was down. YoMix was down. And of course, businesses are losing millions, if I can say that, Kutanai.
Yes, I think you know the economy that we are living in, and most of our transactions are now electronic, and the bulk of those go through that mobile platform. And if it's down, then the whole economy is down.
All right, well, that's Kutanai Sharara, business editor from Business Weekly. Please get your copy on Friday. Now then, it is clear the continued load shedding being experienced in Zimbabwe is now affecting all aspects of Zimbabwean economy, and the outages being experienced by mobile operators is just one of the latest symptoms. It remains to be seen if ZESO will extend an olive branch to mobile operators, just as they have done to certain mining operations. The question is, can the economy continue to work if mobile and especially mobile money platforms are offline? That's the question. Please send your comments through to our Facebook page, Zim Papers TV Network, and our website, ztn.co.zw. And please go to our website. We've got Heartbeat coming up on Thursday at 1 o'clock. We've got The Couch, your only sports show if you want to watch it. And of course, on Thursday, we have The Chase. Well, that's it for me. I'm Andy Hodges. You've been watching The Mint. We've been examining mobile networks. How are they suffering because of current Zimbabwe's power deficit and load shedding? Well, I'll see you tomorrow like I do every morning during the week at 10 a.m. This is ZTN. Take care and have a great day, and you all be safe.